So I went for this LP, like this Supervault, pretty hard. And that's because me personally, I am okay LPing risk assets like maxBTC, like Neutron, like Ethereum with stables, USDC. So this Supervault is maxBTC, USDC paired. However, like Lewin said, the balance of Supervaults does not need to be 50-50. So this is the balance of Supervault here. You can go to this page, statistics, scroll down, vault capacity, and pool balance. So this pool has 0.31 max BTC and 120k USDC. It is not 50-50 like you might see on a traditional Astroboard AMM or other like more traditional pools. And that's because a few reasons. The liquidity adjusts in Supervaults. The liquidity adjusts based on what the actual current price is of the underlying asset. So in this case, max BTC. And what that allows is for traders to trade with optimal execution and minimal slippage. And so what that means is sometimes the pools get off balance. There are mechanisms in place to prevent this. So as the pool gets more off balance, traders end up paying a little bit more fees if they continue to imbalance the pool. And what that means is those fees are then cycled back into liquidity providers. Another reason why the pools can become imbalanced is because you can deposit into Supervaults one-sided. Now, this is a very important distinction to make because a lot of people are like, yeah, like you can do that with other AMMs. And that's true. You can deposit one-sided into other AMMs, but often your deposit gets immediately swapped for, like, there is a swap that happens to balance the pool. So if this was, for example, an Astroport pool, you deposit one-sided, your assets get like zapped, there's a swap mechanism that happens and it tries to retain the pool balance. It's like, it's more complicated than what I just said, but in general, that's kind of what happens. In Supervault, when you deposit one-sided, you're actually depositing one-sided. So if we have like $5 here, if we were to deposit $5 into the Supervault one-sided, you would see this goes up by $5, just like that, no tricks. However, if we want to then withdraw, you always withdraw the current balance of the pool. Okay, that is the distinction. So, and we can show you, but you would deposit like $1. Okay, cool. If I went to withdraw, I would withdraw like 80 cents USDC and 20 cents of max BTC. Okay, so that's how Supervaults work in general. Now, Lewin's question about the performance of these vaults, and it's called inventory risk. So like, what is the current balance of the pool? And then how does the performance of this vault change if the assets, the underlying assets, change in price? So let's go here to, what screen shows it? This screen, I think, shows it nicest. So over the past week, this is the green line is the performance of the Supervault compared to the gray line, which is the performance of just holding spot assets, 50% Bitcoin or max BTC and 50% USDC. So that means you have 50% Bitcoin, 50% USDC. If Bitcoin goes up like a little bit, $10, let's say, then in that case, your LP would go up $5 because BTC is worth half of your vault. So you get half exposure to Bitcoin and your USDC stays the same. However, what we just saw with the balance of this vault, if Bitcoin goes up, you actually don't realize the full like $5 that we just said, because the pool is not 50-50 Bitcoin. The pool is a majority USDC. So if Bitcoin goes up a bunch, you would actually miss out on those profits if you were in this vault. And that's why the performance line shows, you know, the price difference of the underlying price movements of the two assets compared to if the vault was 50-50 and you were holding those assets spot. And so in this case, this is a really like clear example. Maybe it's easier to see on this on the monthly chart. this drop was because Bitcoin just nuked down like what 5% or something over the past few days. And during that time, the balance of the vault was actually a majority USDC, like we're seeing now. And so the vault did not experience as big of a loss as you would have seen if you were holding 50% Bitcoin, 50% USDC. And that's why we see that this green line does go down, but the gray line goes down more because the gray line experienced more of a loss. The gray line is if you were holding more Bitcoin, 50% Bitcoin. And so that's why the vault goes down, because you do have exposure to the underlying risk asset, in this case, maxBTC. But in this specific case, the vault was imbalanced, and so you didn't lose as much. So in this case, the imbalance actually helped depositors. However, it doesn't always help depositors. It could hurt them. So right now, if BTC rebounds and goes up like a lot, there's not as much Bitcoin in the vault. So the vault will not perform as much as the gray line would for holding spot. And so as trading fees come through here, as people are, paying more amount of money to swap imbalanced or assuming fees, the balances are moving around, the assets are moving, and really what this performance tab is trying to show is the most fair representation of, was it worth it for me to deposit into the Supervault? Oftentimes it's not worth it to LP because you lose out to impermanent loss. So in this case, like, let's see over time, was it worth it for me to deposit, or should I have just sat on my bags and held 50% of Bitcoin and 50% of USDC? So obviously in this case, we're adding on like a whole bunch of neutron incentives and structured points. So those will not be considered in this graph. But this graph is as if there were no external incentives being added onto this chart. And so let's see. So far, the vault is outperforming, holding. And let's see how it looks as we go into the future.